It's Thursday, June 30th, 2022. I don't even know where to start today. Another shocking day in these markets. And I want to share a few articles with you and a few thoughts with you. None of this in order, but I think we'll start here. Let's talk about the markets. They just closed about an hour and a half ago. Last night, I was watching the Dow futures, and before I went to bed, it was very late. Dow futures were down 375 points. This morning, the Dow, when the markets opened, the Dow low was 597 points. And another miracle took place today. They really could have lost these markets. I think we are so close to seeing some huge collapses taking place in these markets. But they were able to at one point get the Dow Jones. It was only down about 78 points at one point, from being 600 points down to only 78, and went back and forth. It just closed down 253 points. But remember, it was almost down 600 points. Markets across the board all finished in the red. But this could have been so bad yet again today. You know, and people were writing me immediately, plunge protection team. You see the Fed in there buying up bonds today. I think we're at 2.98 on the 10-year. And as I'm watching all this, the cheerleaders, of course, on all these channels are telling everybody this is a great time to get into these markets. It's time to buy, saying it's time to maybe take a nibble at these markets. And I want to share some data with all of you that my good friend Matt sent me this morning. And I thought that this was really an eye-opener. While they're trying to sucker the American people into buying into these markets, into buying into this housing market, I want to share some of this data with you. In the past 2 years, insiders of these companies, that I'm going to name you a handful of them, not all of them, but a handful of these companies sold over $23 billion in personal holdings. Since their all-time highs, Peloton is down 91%. Carvana down 90% from its all-time high. Virgin Galactic down 89%, Vimeo down 85%, Rivian down 84%, Beyond Meat down 84%, Zoom down 83%, Netflix down 72%, and the list goes on and on. But in the past 2 years, insiders of these companies got out and sold over $23 billion in personal holdings. Now, do you think they knew something? Yet they're telling you and I we need to be jumping in and buying up these companies right now because they're discounted. I think that's a sucker's bet. Just absolutely incredible data right there, showing you that many of these people knew when to get out. Many got out a little bit early, but they got out, and they got out with their money. And they're telling everybody else to do the opposite. They're telling everybody to get in. Let's talk about some more of the news today and why I believe these markets should have absolutely got crushed today. First quarter GDP revised yesterday down 1.6%. Well, the Atlanta Fed came out today and forecasted second quarter GDP to be negative 1%. How in the world could the Dow Jones only be down 253 points today? What in the world saved these markets from really getting slaughtered is my question. Plunge protection team, the Fed. I mean, it's so ridiculous, the tricks and games that they are playing behind the scenes right now. Luxury real estate down 18%. A company called Restoration Hardware down 68% from its highs. This is a luxury home furnishing company, and they blame this on misguidance, and they believe that interest rates are going to go up. It's affecting luxury real estate, so it's affecting their luxury home decorations. So this is just the kind of news that I'm watching today, and yet they actually tried to get this thing back today. They tried to save it. The news is horrific. Record number of Americans open up new credit cards. In the month of January and February, 11.5 million people opened new credit card accounts in the month of January and February. 11.5 million people. Why do you think that is? Because people know that they are dependent on these cars to survive right now. Most people cannot afford $5, $6, $7, and $8 gas. It's going on the card, and these balances are not getting paid off at the end of the month. These balances are getting bigger and bigger, and people are having to service this debt every month. And every month to service that debt, it's costing the average American more and more. Airbnb down 5.56% today. When you see what's happening to air travel, thousands of flights canceled, the cost of air travel, the cost to put gas in your car to go take a weekend trip or a vacation, what do you think that this is going to do to Airbnb? And how many people in this country bought homes to use as hotels, to rent out as hotels? And if people cannot afford to put gas in their cars or to buy a plane ticket to get to these destinations to rent out those Airbnbs, what happens to these homeowners that invested in this real estate hoping that they would keep these homes, these hotels occupied? It's going to be a big problem, ladies and gentlemen. Another article today on CNBC, housing shortage starts easing as listings surge. We're being told that there's no inventory, yet you know about all the new homes under construction, all the new homes coming to the market. We know about the defaults. We know about the foreclosures right now, homes in foreclosure that will be hitting the market. And we're going to see a lot of inventory coming. How many people last year bought a vacation home now regretting it? They're getting it up on the market. How many people right now want to capitalize on these high real estate prices? They're getting these homes on the market. The bubble, I think we're already past the height. But again, housing inventory up 19% compared to a year ago. And just listen to some of these numbers here. Austin, Texas, inventory is up 145%. Phoenix, Arizona, inventory up 113%. Raleigh, North Carolina, inventory up 112%. And I've had people, tell me a year ago in Phoenix, oh, the housing market, it's gonna go up forever. It's never gonna come down. There's just no inventory. Well, now there's inventory, 113% up in Phoenix, 145% up in Austin. These places, many of these people that bought homes in these areas, with the FOMO, just believe that this nonsense was going to continue forever. It's all beginning to turn around. And if you bought a house in the last year or two, I feel really, really sorry for you. If you did a cash out refi to buy cryptos, I feel really, really sorry for you. Here's an article today. Crypto exchange CoinFlex won't resume withdrawals as planned. I hope you don't have money in CoinFlex. Crypto's absolutely slaughtered today. I don't think there's another word I could use. Absolutely slaughtered. So much trouble coming to the crypto world. We were all being sold this bill of goods that this was a safe haven asset. Yes, gold and silver down, but I'm not down 70, 80, 90, or 100% on my gold or my silver. It says here, in an effort to resume withdrawals, CoinFlex issued a new token that will offer a 20% return. Good luck with that. I think they need to raise about $47 million. So again, they need to raise $47 million. And the way they plan to do this is by offering a new token. So you can all get suckered into buying another worthless token and hope that you can access your money when you need it. I mean, think about if you need to get your money out of an exchange like this and you are locked out. Again, if you don't hold it, you don't own it. And I don't know when people are going to learn a lesson, but people are being absolutely annihilated now in the crypto market. People who did cash out refis, bought this stuff, ran up their credit cards buying this stuff. Many of these cryptos are gone. Many of them will be gone. The outlook does not look good, and many people just flat out locked out of their crypto exchange, crypto bank, crypto hedge fund, you name it. The hedge today, 83% of Americans cut back on spending as economy careens towards crisis, poll finds. 83% of Americans cutting back on spending. How in the world could the Dow Jones not be down over 1,000 points today with what's happening. The GDP outlook looks negative. It looks like we're going to be in a technical recession here shortly. Most of you already know we are in a recession. We have been in a recession, and we are careening towards a very, very serious depression. And it's scary how many people are not prepared for what is about to happen. And it scares me because when people get hungry, they're going to really do some erratic things. And we've talked about this many times before. What happens when your friends or your family members come knocking at your door for food, for water, for shelter, for security? What are you going to do? I mean, these are things that I think all of us need to be having serious conversations with our family members, with our friends. Many people I know have already stated to their friends and family that they're not coming to their house, that you need to get your butt in gear right now. You need to be responsible for you. You're not coming and eating my food, draining my calories, putting my family at risk. And so people now are having that conversation because a lot of people, as you know, many of you will say the same thing, that your friends or your family members just go, well, we're going to just come to your house when things get bad, laughing, joking. But they're not. They really mean that. They're going to do that. So we all have to have that conversation with these people in our circles right now that, hey, right now you need to be responsible for you. I cannot afford to give you my food, to give you my water. I can't afford to take this liability because my main priority is me and my family. So we all need to be, having that conversation right now and getting into a mindset of what happens when somebody starts knocking at the door. Are you willing? Are you able to turn people away? And if you don't, remember, there's going to be a liability once you open that door and let people in. They're going to use your stuff. Another article today on The Hedge, demand destruction emerges as Americans cancel road trips. This is another canary in the coal mine, another bellwether to this economy. Americans who planned a road trip in the next 6 months, well, that number fell to 22.7%. Think about that. This time of year, 22.7%. That's incredible. How many people just will be staying at home because they can't afford the hotels, they can't afford to put gas in the cars. How about this? Only 36% intend to take a vacation within the next 6 months. This is the lowest level in 4 decades. Absolutely incredible. Again, this is another bellwether to where we're at in this economy. And I hate to tell you this, but it's going to get much worse. It is going to get much worse. Inflation is not getting under control. I honestly think that the Fed really cannot wait till July 27th to raise rates again. I think they need to do it much, much sooner. And, this talk of 50 to 75 basis points, I think those days are over. You've got to start raising at least 1 full percentage point per meeting. And we cannot wait till the end of July for another rate hike. This inflation is not going away. And of course it's not. You've got the Fed buying bonds at one end and raising rates minimally at the other end, so completely defeating the purpose here. But the average consumer, American, middle class, poor, we are all going to continue to see more damage done to our savings, done to our pocketbooks, you name it. RV industry revving up for sales rebound as road trip demand spikes. That's interesting because the article I just read on this article says nobody's taking a road trip, according to The Hedge. And then over here on Fox Business, the RV industry is revving up for sales rebound as road trip demand spikes. So who's right? I think The Hedge is right. I don't think Fox Business is right. And I'll tell you why. My buddy, Jason, texted me. In fact, he left me a voice message 2 nights ago. And he's got a moving company. And I've known Jason for probably over a year, maybe a year and a half at least, maybe 2 years. It's been a while, but we talk probably every couple weeks, via text. and every few months on the phone. But he left me a voicemail a couple nights ago. He said he drove 2,000 miles in 2 days, and he said he barely saw an RV. Barely saw an RV. He said it was the first time he'd ever experienced such a minimal amount of RVs on the road. It's 2,000 miles in 2 days. So what does this tell us? And I will say this, anytime I go by an RV dealer lot or these fifth wheelers, they are absolutely stacked with vehicles, stacked. So I don't think the RV business is going to rebound like they say, especially when you're talking $5, $6, $7, $8 for a gallon of gas. If you're going to pull a fifth wheel with your diesel pickup truck at $7 a gallon, or you're driving one of these massive RVs, maybe diesel also $7 a gallon. You've got a 400 gallon tank. I mean, good luck. So we are really watching things really fall apart here. And again, watching the markets today, down in the red across the board. Not a good day, but it could have been a horrific day. So please comment down below. Plunge protection team, the Fed buying bonds, the Fed buying into these markets. What is going on here? We have more inflation, cost of everything going up. You look at all these companies, 60, 70, 80, 90% down from all-time highs. And guess what? It's going lower. They're going lower. This is how overvalued these companies were. And how many companies a year or two from now will not even exist? All these zombie companies on Wall Street who got all that free, easy money. They shouldn't even exist. This is why things must collapse and crash. We need to shake out all this garbage and really reset values, know what something's worth, get rid of these zombie companies and clean up the mess. But there are people who just do not want this to end. They don't want the gravy train to end. But at the same time, we are sacrificing the economy for these markets, sacrificing the dollar for all this, because if they keep buying bonds and printing money and some more QE, we have more inflation, and they are devaluing each and every dollar out there, and it is hurting everybody. But one last thing I want to comment on is while I'm watching the markets this morning, and many of you probably seen this commercial, Tunnels to Towers. This is for Gold Star families and people who have just gone through horrific combat and lost legs and limbs. And Tunnels to Towers buys these people, pays their home off, buys them a home, fixes it up so people that are handicapped, it's easier to make it livable for people to get around in a wheelchair and whatnot. And so Tunnels to Towers will customize a home depending on what your needs are for our veterans, and it really seems like a great thing. And they want you to donate $11, per month, so they can pay these houses off and customize these houses for these vets, or for the wife of a vet who lost his life in combat. And so it's a great thing. But I ask myself this: when these people who really need help and deserve the help, they're depending on donations to help them, yet we are sending over billions, with a B, billions of dollars to other countries to help them. Yet our vets are dependent on people donating $11 a month so that they have a livable life, or that their family, their wife and kids, have a roof over their head after they gave the ultimate sacrifice. Absolutely appalling with what is going on. We just sent $450 million over to Ukraine. How many homes would $450 million buy for our vets right now, or our vets' families and their kids? It's absolutely incredible. $450 million just like that. I I think would buy a lot of houses here. And also, I think, wouldn't $450 million injected into the housing market, wouldn't that really be great for the economy? If we were really taking that money and using it right here to help people, especially vets, right here, building homes for vets or for families of vets, Gold Star families, for people who gave the ultimate sacrifice, lost their lives, and we were building homes for their families. But no, we're going to take that money and we're going to send it all over the world by the billions, while our vets are dependent on $11 donations so that they can have a comfortable life. Absolutely repulsive, in my opinion. And I just noted that today, watching this commercial for the 100th time, that this is what it's come down to, that the people that need the help, they're on their own. They're going to have to get donations. But we have billions of dollars that we just print out and send out to the rest of the world, no problem. And I guess we're going to send money to Ukraine until we don't. I mean, basically for many, many years. And this just means that you're going to see more inflation, and you're going to see a lower standard of living here in America, because we're going to continue to send billions of dollars, print more money, devalue our currency, and send it over there. It's a disaster, ladies and gentlemen. It really is. And again, I'm not trying to get political or anything. This is economics. We cannot just be printing money out of thin air and then on top of it send that money to other places in the world. How does that benefit us at all? We are paying an enormous price here now to send that money over to other places. We are paying, at least here in California, I'm paying $6.89 for gas, and your standard of living, we're all sacrificing a lot of things so that we can send this money over to other places around the world. And again, why are we not helping our people right here first? Right here. I don't get it. Anyways, I'm going to leave it there today. Again, I'm just shock and awe with the games that they are playing in these markets right now. Absolutely incredible to see the market down 600 points at one point. And with the news, the continued bad news, the continued data that we're getting on this economy, and it's probably much worse than what we're being told, and the data that we're actually reading is probably much worse than that. How in the world could the markets have not absolutely got crushed today? I'm sorry, 253 points on the Dow Jones today. It should have been 1,253 points today on the Dow Jones. I mean, you look at what's happening to the airlines, what's happening to the tech industry, what's happening to crypto, what's happening to people's jobs, inflation continuing to run wild. You look at the condition of the banks now, their stocks are just absolutely being destroyed. Home builder stocks destroyed. Everything is being destroyed. And the Dow Jones is only down a couple hundred points today. It's absolutely a con. It's a con job. And I can't even say it's laughable now, because it's so disgusting and repulsive what they're doing, because they are flat out lying to everybody. Still, you know, and I know how bad this economy is. All you have to do is go to the store, go to the grocery store, go to the gas station, talk to your friends. People are falling behind. They're getting in very, very serious financial trouble. People are drowning in debt. And you turn on the television and they're telling you everything is okay, that this is a buying opportunity, that, by the end of summer, everything's going to turn around, everything's going to be okay. We're going to have a great Christmas. Next spring is going to be wonderful. We're going to be back into some financial utopia. It's always tomorrow, and things are better than you think right now. And you're saving 14 cents on a gallon of gas, and everything's going to be okay. Just have a great 4th of July. This is going to get bad, ladies and gentlemen. It's going to get real bad. If you think it's bad right now, you ain't seen nothing yet.